We are live. Welcome everybody to our channel, Be Wise, Get Wise. Today, I'm really excited to present to you two very popular and top producers in Mortgage Alliance. We have Ayaz Bhamji, who is, the top broker in Mortgage Alliance, and Rohit Kohli, his team member as well today. So, welcome, Rohit. Welcome, Ayaz bhai.
Thank
Uh, you
you.
know, I want to just briefly, give your introductions to the audience here. So, Ayaz bhai basically graduated from York University, right, as in business and economics, and he has been with Canada Trust, as a business development manager for residential mortgages. Over 6 years, he's worked for TD Bank. He was a manager, bank manager, and branch manager for over 6 years as well. And then he has been letting the independent mortgage agent for about past 20 years with Mortgage Intelligence. He's winner of multiple awards and performance awards and at Mortgage Intelligence. He's currently ranked as one of the top five individuals across Canada with Mortgage Intelligence, and he appears on the very popular radio show you might have heard, CMR 101.3, every Thursday at 3:40 p.m. And make sure you catch him live there as well. So that's CMR 101.3 every Thursday, 3:40 p.m. And he covers all the mortgage topics, rates, and everything that's hot there as well. So welcome, Ayaz bhai, and
Thank you.
I'll also introduce your team member here, Rohit. Rohit Kohli and I have, we have done some business together, and we continue to be very successful at it. So let me tell you Rohit's portfolio as well as his background. Rohit's an MBA from Southampton in UK. One of the top agents with Mortgage Alliances, and he's ranked among the top 50 brokers in Mortgage Intelligence. So platinum broker with TD as well as Scotiabank, and he's won the volume award in 2021 for the top sales. So we are talking to people who are very successful in their business, and they know a lot. So today is the opportunity for us to share their knowledge with you. And if you have any questions, feel free to message me on Facebook, LinkedIn, or YouTube. We are live on all three platforms. So yeah, let's get to the topic. Rising interest rates. Where are we heading? So, Asbay, I'll give you the opportunity to go first.
Thank you.
Please, go ahead. And actually, you know what? Before we go into the topic itself, maybe you can tell us about your team a little bit. I know your team has been the top three in all of Canada. So tell us a little bit about your team, what motivates your team and yourself, and then we'll go into the questions right away.
Thank you, Ace. Thank you for your very kind introduction. Thank you for allowing us the platform to talk to you and to your viewers. It's an honor. It's a pleasure. I always tell my team members that we're here because we have partners with us. We have Canadians who are sourcing out intelligent mortgage solutions. So actually, our team's name in our brokerage is Intelligent Mortgage Solutions, is the name of our team. We really ways really believe in making sure that we're not just here to approve mortgages. Our objective, our team's objective, is to make sure that we are educating uh, individuals who are coming to us seeking mortgages, whether it is a purchase, whether it is a refinance, whether it is a portfolio review of their mortgage portfolios. As you know,
Mhm.
we have many clients now who have more than one property. So just as we are very diligent in the way we do our financial planning when we're investing our assets, I think mortgage planning is very essential, especially when you have multiple mortgages,
Mhm.
because better planning leads to lower cost of borrowing, which basically means that our clients are going to save more money. So I think that's our objective, to always be very transparent, very intelligent in the way we communicate with our clients. Our team has now 39 members, ways,
Wow,
and we started building our team about 4.5 years ago.
fantastic.
And with your kind introduction, you did mention, we are ranked as a top number 3 team across mortgage intelligence across Canada.
Wow.
As a matter of fact, in a couple of weeks, our head office is in Montreal. So there's a gathering of 5 top brokers in Montreal, and
Hmm.
I've been invited to represent our team there. So,
Awesome.
this is thanks to our customers. This is thanks to our team that works really hard. I think it is thanks to the concept of meritocracy that we utilize to
Hmm.
make sure that we are giving good, solid, merit based, and intelligence advice to our clients. And so that's what we do. And really, I couldn't be more proud of the team members that we have, including Rohit, who has only joined me about 2.5 years ago. But his performance, as you pointed out, speaks for itself, because he has also employed these ethical values of transparency, honesty, intelligence, and keeping the interest of our clients first and foremost
Absolutely. Yeah.
in the way we manage the mortgages. So that's who we are. That's what we do, and we love being in this space, because I've been in it for almost 30 years, slightly over 30 years. I
Yeah.
have some banking background as well, so it's good because it allows me to speak from both sides of the mortgage space. So,
Absolutely.
in terms of the question that you've posed today, where are interest rates heading? Now, let me tell all our individuals that are listening or who are going to watch this podcast later on.
Hmm.
I've seen everything in this business. You can imagine being in it for 30 years. We have seen all kinds of interest rate fluctuations.
Hmm.
We have seen all kinds of real estate market fluctuations. So, there is a macro view of what is going on when I look at what had happened in the past.
Yeah.
Currently, as everyone is aware, we have an inflation problem in the market, and inflation is excessively high. As a matter of fact, the inflation reading for the month of July, that was sorry for, yeah, for the month of July, when we had reached 8.1%, is historically one of the highest inflation rates in Canada. And for all of us, who even understand the basic of economics,
Yeah.
that high inflation is like poison in the economy.
Hmm.
It has to be contained,
Yeah.
because it has a potential of ruining the economy.
Yeah.
We certainly do not want to go back in the 1970s, when the prime minister of the time, Pierre Trudeau, our current prime minister's dad,
Hmm.
had introduced wage freeze and price freeze.
Yeah.
Right? So those times required drastic measures, but that's not open economics. When the government steps in and says, well, you know what, wages cannot exceed a certain amount,
Yeah.
or prices cannot exceed a certain amount. We believe in an open economic market system. For
Hmm.
that reason, we have to have inflation under control. Now,
Got it.
the good news is that we're seeing a positive trend. Over the last 2 inflation readings that we have seen, we've gone from 8.1 to 7.6, and we see the last reading of 7% for the month of August. Okay,
Hmm.
so that's a good thing. Is it enough? We don't know. Although the last inflation reading on Tuesday shows that it's not just the gas prices that have gone down. Other uh, goods in the basket that reflects the consumer price index is also showing a downward trend.
Hmm.
So, I think we're headed in the right direction. The Bank of Canada is concerned about the fact that they do not want inflation to be entrenched in the economy at a higher rate. And so the Bank of Canada's target remains 2%.
Hmm.
They have made it very clear. As a matter of fact, 2 days ago, there was a speech by the deputy governor of the Bank of Canada, where he says clearly that we will continue to take whatever actions are necessary to
Hmm.
restore price stability for households and businesses, and to maintain Canadians' confidence that we can deliver on our 2% inflation mandate. So you can see that's what's going on. Now, I can quote many economists, and you all know that economists say things and predict things. We
Yep.
don't know for sure, but the general consensus is that the October 26th interest rate announcement by the Bank of Canada will show an additional 50 basis points increase.
Mm-hmm.
And beyond that, we have one more rate announcement before year end, where I think the prediction is we're going to get another 25 basis points. So another 75 basis points up to year end, which brings our prime rate to 6.2%. That's high.
Mm-hmm.
But
Mm-hmm.
I think most economists now agree that at that point, the Bank of Canada is going to have to pause for a bit, allow the effects of higher interest rates to filter through the market, through the economy, and see the exact impact of that on inflation.
Yeah.
And there is further prediction that because the Canadian economy is very much interest rate sensitive, given the amount of liabilities that Canadians are holding,
Mm-hmm.
eventually by mid of 2023, I think you will see the Bank of Canada rate, if it goes to 4, as I predict it will by year end from 3.25 now, that the Bank of Canada will then roll back that rate to what we call neutral interest rate territory, which
Mm-hmm.
is generally considered to be around 3%, which is roughly where we are today. We're at 3.25%. So short term, I think you're going to see another 75 points increase by year end, a
Yeah.
half and a quarter. And
Yeah.
then I think come springtime, hoping that not, expecting any unusual to happen in the world in the geopolitical crisis that we have around the world.
Mm-hmm.
Hopefully, there's no other war somewhere else.
Yeah.
If things stay the way they are, I think consumers can expect the Bank of Canada to lower the rate sometimes in the spring, and hopefully that will have a positive impact on the mortgage holders. And if I can just say this last thing, ways,
Yeah.
so even if we were to go to 6.2% prime rate, then we're looking at roughly an insured mortgage where those are mostly for first time home buyers who put less than 20% down.
Yeah.
It's slightly over 5%, around 5.1%. In a conventional rate, slightly below 5.5%. I think that's the conversation all agents need to have with their clients.
Mm-hmm.
Help them plan their budgets. Help them talk to Rohit. He can help,
Yeah.
in terms of monthly financial management.
Yeah.
And I know you're going to ask me about first-time home buyers, and I have something to say about that.
Yeah.
But I think, notwithstanding the high interest rates, this is still a great time for first-time home buyers to buy, and I look forward to answering that question as well.
Yeah. So I guess let's get into that question. See what some of the buyers are. They're waiting for the prices to go even further down. So what is your opinion on that? Is in the sense we had almost like right now almost three interest rate hikes, right? And we are looking for another fourth and a fifth. So do you think these interest rate hikes that are coming in October and December will further take the price down, or do you think the price has already significantly come down, that it might not be what do you call it, directly proportional to the interest rate hikes anymore?
That's a great question, Ways. And let me, again, just for everybody that's listening or watching, say, as you all know, I'm not a real estate agent, but I'm also a real estate investor. So I also follow the real estate market that way, but our work is directly, to a certain extent, tied to the performance of the real estate market as well.
Hmm.
So let me say this to you, and I'm sure probably it will not be a surprise to any of the agents that are listening. I have seen in the last 2 to 3 weeks a substantially higher agreements of purchase that are coming through our office now
Hmm.
for properties in the range of 700,000 to just slightly under $1 million, for
Yeah.
obvious reasons that you go over a million, you need 20% down.
40%. Yeah.
Yeah, that's number one. The second thing I've also noticed, I had an offer that came through today out of Burlington. My client only got this home after making 6 unsuccessful attempts to buy a home in the range of between $800,000 and $900,000.
Right. Wow.
That is telling me,
Yeah.
that is telling me that, do I think that the prices in that range will drop further? I don't think so. And even if there is a slight drop, I think it will be minimal. That's my opinion.
Mm-hmm.
And here is something more interesting I want to talk about,
Yeah.
ways. Okay,
Yeah.
as I mentioned to you, since the Bank of Canada started raising interest rates, so far they have raised interest rates by 300 basis points. The
Mm-hmm.
Bank of Canada rate was 0.25
Yeah.
when we were all paying one and change in interest rates.
Yeah.
Now the Bank of Canada has increased the rate by 300 basis points, and we sit today at 3.25%. If you take that 3% interest rate hike into account, okay, and I really want to make this point very strongly, because
Mm-hmm.
this is what I'm talking to my clients who come to me asking me, is this a good time to buy if they're a
Yeah.
first time home buyer? And
Mm-hmm.
I'm specifically speaking about first time home buyers. I'm
Mm-hmm.
not talking about investors. I'm not talking about clients who wish to sell their home and buy a home for 1.6 million. That's a different discussion. I'm not saying they shouldn't do it, but that's a different discussion.
Mm-hmm.
So for first time home buyers, that means, let's say if a first time home buyer is borrowing $700,000
Mm-hmm.
and say they bought a home for 750.
Yeah.
Okay, 50,000 is exactly what you need minimum down payment there. Okay,
Yeah.
so if you're borrowing $700,000 after buying a home for 750,
Mm-hmm.
roughly on $700,000, you're going to be paying extra interest of a little bit under $20,000 a year, at 3% extra on $700,000 per year, because interest rates have moved up by 3%.
Yeah.
Over 2 years, you will pay about $40,000 extra in interest.
Dollars.
Even if we feel that interest rates are going to stay low, higher for over 2 years, which my previous answer tells you that they won't,
Mm-hmm.
still it will be about 60,000. Now, ways you will agree, and all the agents listening will agree, that if you buy a home today for 750 as a first-time home buyer,
Yeah.
5 months ago, in February and March, that house, chances are, was probably around between maybe 925 and 950. That's
Absolutely.
been the reduction
Absolutely.
in the value of real estate.
Yeah.
So here is what I tell first-time home buyers, that you are saving at minimum $150,000 in price valuation, probably slightly more. And
Absolutely.
you're paying about $40,000 more in interest over 2 years at a higher cost of borrowing because interest rates have gone up due to inflation. You are
Yeah.
still ahead of the game, roughly $100,000. So
Absolutely. Yeah.
it's a great time, I say, to buy as a first-time home buyer. I do not anticipate prices to come down much lower in that price range.
Mm-hmm.
And even if they do, the influx of first-time home buyers, when that point is established, is going to be so huge that it'll again start driving the prices home. The market is calmer now a little bit, not that
Mm-hmm.
much, but a little bit. It's a great time to buy, I would say, for first-time home buyers, provided. And this is where I think our ethics comes into play. This is
Mm-hmm.
where we need to guide people properly. I
Yeah.
always, provided the income streams are sustainable, labor markets are still very fluid. So
Mm-hmm.
as long as the buyer's employment is stable,
Mm-hmm.
the incomes are stable,
Yeah.
ability to pay at the higher interest rate is there,
Mm-hmm.
that there is no additional financial stress, that you're not buying a home, you have a car lease for $1,400, you owe 42,000 on your unsecured line of credit. If all of that is not there, I would say it's a great time for first-time home buyers to buy, because I always believe that besides the timing of the interest rate and real estate market, when you buy a home ways for your family,
Yeah.
you are also improving what I say, the quality of your life of your family, of your children. There is a different feeling when your children are living in a home, even if it's a small home, compared to a
Yeah.
two-bedroom apartment.
Yeah.
I remember when
Absolutely.
I used to live in an apartment many years ago, my son wouldn't bring his friends over. because he says, Dad, I go to their home, they have a home. So you see, there is that mental psyche as well for your
Yeah.
children's mental development, for the quality of life of the family. I think it's great if people can afford to buy. It's a great time, I would say, to be a first time home buyer.
That's absolutely, that's so true. That it's the home is not only just a, you know, uh, just a roof over your head, but it's mentally, emotionally, providing security for the family, right, and for your mental health as well. And it's when you have a family, it's a secured nest, right? So definitely, great tips and advice for first-time home buyers. So first-time home buyers, if you're watching this, that is something that you should take a note of. That's Ayaz has mentioned that you are getting a significant discount on the properties, and even if you're paying a higher interest rate, it is not as much as that you would have paid for the property, right?
Mhm.
So next leading question to that is that what's your advice for investors?
Sure, sure. Um, Ways, just insofar as the first time home buyers, I just want to add one more thing.
Yeah,
Look, before the interest rate started going up, when Mr. Putin declared the war on February the 24th, and keep in mind that this geopolitical crisis in Europe, all economists will tell you, is one of the key driver of high inflation, because gas prices and energy prices, the increase in those two things generally have devastating effect on the economy. Today I'm reading that grocery prices have increased by 11%. Guess what? Farmers who grow tomatoes have to get those tomatoes into Metro and into whatever the
yeah,
supermarkets are. I shop in Metro, so that's the one I know.
yeah,
And the cost of transportation goes up when energy prices go up. So you can see the prices being sort of passed on to the consumers, not just at the pumps, for example, but also when you're buying other goods, that, whether it is home furniture, appliances, food, cars, whatever it is, cost of transportation goes up because the fuel costs go up. So what I'm saying is that, notwithstanding any of that happening again, let me say to the agents, and through you guys to the first time home buyers, that there was an immense push by first time home buyers to buy homes at that time. Guess what? They haven't disappeared. There is a lot of first time home buyers who are waiting to buy. Ways you pointed out correctly, that they are just waiting to see, have we bottomed out? And
yeah,
remember, the concept of bottoming out is a psychological concept also. The moment media says, rates are coming down now, we expect prices to go up again, people are just going to flock back into the market. Just as
yes,
when the media scares people, people back out. When people say,
yeah,
oh, interest rates are really going to go up, renewing mortgages are going to be more expensive, people may have difficulty paying their mortgages, people automatically back out. So
yeah,
there's going to come a point in time when we're going to go the other way. I
yeah,
think in the lower value range, it's already happening. And at that time, a lot of people will come back in the market. And I can tell you that at least two major banks who are this month doing their business plans for 2023, as
hmm,
you know, for chartered banks, their
yeah,
fiscal year end is October 31.
right,
So their fiscal year begins November 1 to October 30. So currently, I know our partners with Scotiabank, TD Bank that we work with are
hmm,
telling us that they're in the process of getting their objectives for next year. Let
right,
me tell you, let me tell you something. I asked, so how much are they getting reduced by? And one of the banks, I'm not going to name names, they're going to say that
yeah,
she told me, no, we're not getting them reduced. There's about a 10% increase in volumes expected. What does
wow,
that tell you?
yeah,
That tells you that what the banks are thinking is that the market is going to continue to be robust, perhaps not at the $2 and $2.5 million range of the value,
yeah,
but
yeah,
markets are going to continue to be robust for first time home buyers. And today, even a first-time home buyer cannot buy a home for $500,000 the way
No,
it used to be 15 years ago, right? So
no, no.
700, $800,000 is a first-time home buyer. That's quite high. So I think for first-timers, absolutely, this is a great time. Now, let me come to your second question that you've asked me. What about investors?
Yeah. So
So,
the investors are on the fence. They are,
yes,
doing their numbers. They are analytical people, right? So they are working their numbers and they are looking at the properties and saying to me that, oh, the prices haven't come down, you know, that much that we are ready to make a move, right? So what do you have to say to them that they are looking for a bargain, but is this the time for them to make a move or still wait?
here is what I would say to them. And let me preface that answer by saying the following. And I
Hmm.
say this to everybody. My team
Hmm.
knows I've spoken about this to many people. I think to you as well, Ways. That
Yeah,
I have a friend who lives in Whitby.
yeah,
I think you will remember I said that,
yes,
but for the benefit of all other listeners, I've
yeah.
known him for about since 96. I know him. So what? About
Wow, yeah,
25, 27 years.
yeah, yeah,
He owns over 100 residential properties. When I tell people that, people go crazy. This how is
yeah,
that possible? But he started 25 years ago.
yeah,
And
yeah.
I told him in November, December of last year, I said, Bashir, the market is the highest I think it's ever going to be. I think you should sell. You'll have a lot of money in the bank.
Yeah, yeah,
And his answer to me was, sell and do what, Ayaz? I
yeah,
said, well, cash out.
yeah, yeah, yeah,
He says, look, I've been buying real estate for 25 years.
yeah.
My overall, and average amortization is between 25 and 30
30
years.
years, yeah, yeah,
So if you bought a lot of homes 25 years ago when the prices were down, what does that mean in terms of outstanding mortgages?
yeah.
They're very low. Well, he
Yeah,
gave me the
very
exact
low,
number. He said,
probably none.
right? Exact. He said, on average, my encumbrance is about 5% left. So he says, and he said, I reminded you, Ayaz, that when you're buying real estate as an investor, you should have a long term strategy. So to the investors, I would say, stop expecting unreasonable bargains. You
Yeah,
all know that inventory is low right now. People don't want to sell their homes for free. I mean,
yeah,
I don't
of
mean
course.
free
Yeah, yeah.
literally,
I
but
mean,
at
yeah.
much reduced price, right? But I would say to the investors who I know have a lot of cash in the bank right now,
Hmm.
generally, one of the reasons we have an inflation problem is that people have money in the banks right now. Okay. So, and I'm sure if me, you, and Rohit looked at our own situations, I don't think I would be going off bound by saying perhaps all our three people's liquidity is higher than what it was 4 years ago. So, if that is the case for us, it's the case for many Canadians.
Yeah,
So, I would say that for investors, I think it's a great time to buy investments in the lower price range of seven, eight, $900,000,
hmm,
as long as they have the ability to hold real estate.
yeah,
Real estate, if you are investing in real estate, and I know this is a very common thing, you know what I'm
yeah.
going to say next. You can't say, well, I'm going to hold it for 24 months and then I want to make $150,000. Then you should not be buying. But I
You
think
should
if
be
you
buying
have the
stocks.
ability to
Should be
hold,
buying stocks.
yeah, sorry.
They should be buying stocks rather than real estate, right?
Correct. So I think of course there is other factors, ways you have to look at your financial situation. I think age plays a big role. I mean, you and Rohit can probably buy another 10 properties in rent. Maybe I can because I'm not as young as you guys. So I think age comes into play. I think you've got to look ahead and say, you know okay, so if I'm going to buy real estate, how many years can I hold it for? 10 years? I think that's a good number. If you're able to hold real estate between 7 and 10 years, I think you should buy,
Mhm.
guaranteed. uh,
Yeah,
I don't know if I would buy a home for 2.1 million as an investment, but I
yeah,
would certainly buy something around a million,
yeah.
slightly more, 1.1 million. If I have to pay
Yeah.
1.2 million, where I'm getting, you know, uh, two dwellings,
Yeah.
main
Two dwelling.
level, yeah,
Duplex.
yeah, with
Duplex.
the
Yeah.
basement rent. So you
Yeah.
will find also that the return on investment is great, right? Because first of all, you have dual rents coming in. We
Yeah.
all know, and I was just reading that rents have really started to go up now.
Yeah.
So
Rents.
even though the
Rents are
interest rates
all
are
time
going up,
high. Yeah.
yeah, go ahead, please.
No, no. I'm just saying that rents are all at the all time high. Whether it's the GTA or surrounding areas, the rents are all time high.
Absolutely. So I think you will find, even with the increased interest rates, and here is something else, ways that people come, my agents come in, my clients tell me, oh, but I'm out $400 a month. Well,
Mm.
when
Mm.
you're out $400 a month on a
Mm.
cash flow basis,
Yeah.
I tell my assistant to quickly print out an amortization schedule.
Yeah.
And I show to the clients
Hmm.
that yes, you may be out 400, but $792 a month is going to pay down your principal. So
Right.
you are actually ahead $392,
Absolutely.
right? So
Absolutely. Yeah.
for investors, I think it's still a good time, especially to buy on low end.
Yeah.
I made an offer today.
Hmm.
Okay, I made an offer today in Burlington for a
Nice.
semi-detached that I need to spend 50,000 on.
Right.
It's listed for 710. I put an offer of 690. If I get it, I'll buy it.
Yeah.
Because
Why
when
not?
you think about it, if you
Yeah.
buy something for $700,000 today and you hang on to it for 5, 7, or 8 years,
Hmm.
you can never be 100% sure. And I think we have to be honest about it. But probability is that it'll be worth more than what I'm paying for 7 years down the road. So
Absolutely.
I think,
Absolutely.
it's a good time for sure. But I preface that by saying always you've got to look at your financial situation.
Yeah.
You should never overindulge, notwithstanding what my friend did 25 years ago. Times are
Hmm.
different now. You should know your limits. I
Yeah.
think you should sit down with a mortgage professional and get proper opinions about what your affordability is. Ways, let me
Hmm.
say one more thing to you.
Yeah.
Before COVID in 2020, we started to see banks saying for multiple property owners, even though their incomes qualified because there was rental income, they kept saying decline suddenly. And
Yeah.
of course, I'd get on the phone and say, what the hell? The numbers
Yeah.
make sense. They said,
Hmm.
yes, this is for somebody who has three properties rental and buying a fourth one, and they've their primary. And you know what
Hmm.
the reason was?
Hmm.
They said, yes, your client's income qualify, but
Hmm.
there's two problems with your clients. There
Hmm.
is excessive reliance on rental income, and there is not too much liquidity as backup for your clients. I said, what
Hmm.
backup do I need? What do you mean
Yeah.
excessive reliance on rent?
Yeah.
When can in Toronto you not be able to rent a property? They
Yeah.
said, yeah, but
Absolutely. Yeah.
our risk models show that we've got to take that into account. This is
Hmm.
October, November 2019.
Hmm. Hmm.
Now tell me, Ways, you are an agent. What happened when pandemic broke? In mid 2020s and in the fall of 2020s,
We were busiest.
we were busiest, but what was happening to downtown condominiums in terms of rents?
Oh, yeah. I mean, they went down.
This is what I mean. So when an investor is looking to buy, yes, take into account that you're going to get rent money. I agree with it.
Yeah.
But please have backups. Please make sure that, God forbid, and there's another pandemic and your unit is, or not there, no tenants for 8 months. Do you have liquidity to be able to sustain your mortgage payments? I think these are the kinds of preparations one needs to do if one is looking to extend their real estate portfolio in terms of investments. But if you
Absolutely.
check that those what do they say? Dot your I's and cross your T's.
Yeah. Yeah.
You have some liquidity. You are in financially good situation. You have a low mortgage on your primary residence. I think it's a great time to, as in all other, your age and everything else sort of factors in. You don't want to
Yeah.
buy three rentals when you're 77 years old. That's what I mean.
Right.
I'm not age discriminating. I'm just being honest. And I
Yeah.
think if you can clear all those boxes, I think it's a great time to buy Ways. And I think uh, Here's what I will end by saying on this particular matter.
Yeah.
We know immigration is going to go even higher. The federal government has clearly said as much. Labor markets are tight. Even in the United States, is if you follow US, you will see what the governor of Florida is doing is busing immigrants up to Martha's Vineyard and in Massachusetts in those areas.
Yeah.
But a representative of Martha's Vineyard said that we go into restaurants and we have to wait 45 minutes to get a table. It's not that there are no tables open, but there's no waiters to wait those tables. So
Hmm.
up in Martha's Vineyard, people are happy that these immigrants are coming. They're saying actually to the state government, let's give them work permits, train them, put them to work. My
Hmm.
point is simply immigrants, the flow of immigration is going to be here.
Yeah.
That's going to up the demand. I read today, Ways, and I'm sure your audience will be interested to learn that where did I write this? Your audience will be interested to learn that in 10 years between 20 what is it 2010 to 2021, um, home ownership actually went down. So we have right now about two-thirds of Canadians that own homes, first of all. So you
Hmm.
have almost 35% of Canadians who will eventually be looking to get into an okay, so maybe not all 35, but a
Yeah.
substantial number will come in and buy homes. That's one
Hmm.
pressure point. The second pressure point is immigration. So
Yeah.
that's going to be the second point that's going to continue to keep the demand of real estate up over a longer period of time. And
Yeah.
finally, I would say, given the turmoil and the upheaval in the world, I just went through Europe for 5 weeks in the month of
Hmm.
August. And
Yeah.
I can tell you, and I don't travel much. This is an unusual trip I took. But you always hear, people saying Canadians are well regarded overseas.
Hmm.
I
Yeah.
went through a few European countries, and I
Hmm.
can tell you that statement is absolutely true.
That's
Canada
good.
and
No.
Canadians are well regarded. People respect Canada. When I was buying stuff in Turkey, when I took out my card, one of the vendors understood CIBC. He said, "Oh, sir, you're Canadian." I said, "Yes." He says, "My goodness, you guys are lucky to live in Canada."
Yes.
You know
Yes,
what
we
the
are.
inflation rate in Turkey is today? The report
No.
came out today, 82%.
Wow.
All I'm saying to you is that people desire to come to Canada. The demand for people to come to Canada is only going to increase, which is going now. I see the government is now starting to build real estate, which is a good thing. But I think there's excessive demand. So for investors, I know it's a long answer I've given, but I think if you can have these conversations with your investors, I think
Yeah.
it'll be good for the investors and good for the agents, to get business which is ethical and which is good for the buyers who are looking to buy real estate.
Absolutely. Absolutely. I think the people watching who are investors as well is that you have to look into just my point here is saying that uh, n- sometimes you have to look into the traditional model of renting out a property, and sometimes you also have to keep your options open where you could do a short term rental like the Airbnb, and and then you will be definitely in the positive cash flow, right? So just my thought there. And
Absolutely.
Rohit, anything from your
Yeah,
side with regards to first time home buyers as well as
yeah,
uh, investors?
yeah, sure. Thank you. Ayaz was giving us such good information. I didn't want to interrupt in between, but I'm going back to the first time home buyers. I do have some tips for the first time home buyers. So I'll echo what Ayaz said is to, it's a good time to enter the market, and that's what I've seen with my customers as well lately. Within the last 3 months specifically, I've seen a lot of first time home buyers entering the market, buying more than the refinances, more than the investors. So they definitely saw an opportunity to enter the market, which wasn't there 6 months ago for them, right? And
Mm,
again, it goes back to the same thing. where we said maybe the monthly mortgage payment they're making is probably $200-300 more than before, but obviously they're now getting a much cheaper property, which is like 100-150,000 lower than it was
Yeah.
like 6 months ago. So great time to enter, but few tips I would say, plan in advance. So speak to your mortgage broker, try to get that pre-qualification. So even if you're planning to buy in 3 months from now, there's no harm in having a quick conversation or a 10-minute conversation with a mortgage broker. Find out where you stand, right? What are the down payment rules? So how are you going to get prepared for the down payments?
Yeah.
What are the credit bureau scores you require, and how are you going to reach there? We've seen in the past, although most people are aware that the credit bureaus are required,
Yeah.
some of them didn't have no credit cards or no credit history. And in those cases, lenders are not accepting their incomes. It's way too late. They now have to wait 90 days to build up the bureau. So we as mortgage brokers or mortgage agents, we can educate you, plan things in advance for you. And then just a disclaimer that I personally don't check any credits when you come for pre-approval. It's a quick 10-minute conversation over the phone. I would get to know you a little bit, know your down payment, know your incomes, jobs. As long as you have a stable job, I can qualify you verbally for what you can buy in future. And there are no credit checks. I don't even ask in most cases for the upfront documentation. That comes later as a
Yeah.
second step. First step is to know your profile and qualify you on on an estimated amount of what you can qualify for. So
Yeah.
I would take another couple of minutes to give in my own example when I was new to the country and how I bought my first home. So I was fortunate enough to find an honest and knowledgeable mortgage agent when I bought my first home in 2010. So he actually taught me how the mortgages work, whether in terms of the bank guidelines, in terms of rates, terms, penalties, portability clause, how it works as a first-time home buyer for buying multiple properties, how to use your equity or the refinance. So, and when I became a mortgage broker myself, I follow the same rules or guidelines. I educate my clients on the whole mortgage process in a very honest, transparent, and ethical way. So I would say if you're looking for someone who's accessible, it's hard to find people who are good and accessible as well. Uh,
Accessible and responsive, right? That's
responsive,
what I.
responsive,
Yeah, Rohit's
and
always very responsive, and the way he does work, just to tell the audience, is that he works out different scenarios for you, like 2 3 scenarios that he's helped my clients many number of times.
mm,
He presents the scenarios, and then he advises you which scenario is good for you, and then you are making that decision. But at least you are being given a choice, you are being educated about the
correct.
whole process and your options. That's what I love about Rohit. And for the viewers, I have put up Rohit's contact information right there,
Thank you.
on the screen right now. Please make a note. 647-406-1313 is his number, and he can do the scenarios for you. And Rohit, if I may, tell my audience that you're offering a 30-minute free portfolio evaluation.
Yes,
Um,
yes, I am. I don't need even 30 minutes. I mean, I'll be
okay.
quick because everyone is busy. I would
Yeah.
say good 10 to 15 minutes, would be a great conversation. I'm not expecting any business as such. So I've always been very passionate about real estate. So for me, it's the conversation, working out the scenarios, see what works for you. And then I never ever push people to go for anything. What I do is, like you said, because I'm an ex-IT and I like to present things in a proper format. I give you options on the table, option one, option two, option three in some cases. And then you decide when you want to come to the market, enter the market. I'm always there to discuss, how your deal is going to work out and what rates and what terms or what, whether you should go for fixed or variable and why not. So
Yeah.
yeah, I'll be more than happy to, have a quick 10-15 minute call. If you have more time, I'm more than happy to talk. I always love to talk about real estate.
Absolutely.
Thank you.
So, this is another question that's coming up here. Some of our viewers, they have purchased, in January to March in the higher side. They are facing, the rising interest rates, and their mortgage payments are now more than what they had expected. So, both of you, whoever wants to go first, what is your advice? How can we kind of, manage these higher mortgage payments? Are there anything in the market, products or strategies that you would recommend to handle this increased payments? How can people get by for the next year or so, until the rates come down?
Sure. Ways, Rohit, thank you for bringing out those tips. That's great, by the way, for first-time home buyers. And I really recommend to all of you, if you have any, first-time home buyers, have a chat with Rohit. As Ways pointed out, I think you will see that the real, honest and intelligent solutions that he will produce for your clients will make you also feel good when you're chatting with your clients. So that's one thing I'll say. Look, let's be honest. People who bought homes in January and February bought at peak. That's I hear talk about buyer's remorse. Well, you know what? It is what it is. Nobody buys a home for 6 months or 12 months. Long-term game in real estate always pays off. So that's the first thing I would say to them. The
Absolutely.
second thing I would remind everyone is that even when you bought homes in January and February, you were approved at the rate of 5.25%, because that was the stress test rate. I know we were complaining at that time that the stress test rates are too high. Well,
Yes.
now you see what the government meant, that in case something bad happens, the war in Ukraine, and then the supply bottlenecks in China, adding to inflation and therefore higher interest rates, you see that's where we are. So people were qualified at that time at the rate of 5.25%. Now, I know that we knew that, but we did our math on the basis of payments at that time. And this is a good reminder for all of us that when we're buying homes, we have to be realistic. Tell the clients intelligently that, look, this is what could happen. I go on the radio and I hear some other people, real estate agents, coming and saying, "Oh, you got $150,000. Buy a home, guaranteed after 4 years, you'll make $400,000."
Yeah,
You
you
know what?
can't
That's
say that.
dangerous. It may be true, but it's dangerous to speak so definitively, because you don't know what can happen in the economy. So, coming back to these individuals who are having difficulty, unfortunately, the honest answer is, for people who bought in January and February, there is not much that can be done, because they can't re-amortize, because they've just bought the home, so their amortization are already to the maximum. I would only say to them is that, you know what, they've got to get through the turbulence for the next 5 or 6 months. Now, here's what I always like to break things down. So if on average your payment has gone up by $700, and first-time home buyers, the mortgages hopefully were not that large, though the prices were very high in January, $700. Then the way you've got to look at it is say, do I have a line of credit of $10,000 that I can get? 12 times 7 is 84, if my math is right. For 12 months, it's going to cost you about $8,500 more a year to supplement the extra payments. As I said, I don't know 100%, but I'm a firm belief myself that by summer of next year, prices will moderate, things will come down again. That's one thing I can say to give some confidence to these individuals. The second thing I want to say also is that there are quite a few banks that do not raise mortgage payments as interest rates go up. TD is one, RBC is another one. So if you are there, then I know that the banks have started sending letters to clients. TD has just started this week, cautioning people that they are reaching their trigger points now, where majority of the money is going to go to interest, and so they'll have no choice but to bump up the payments. Before they do it, I would tell your clients to go in and even bump it minimally by $100 or $200, so that your mortgage will fall back, and the trigger point will take that much longer to get there, rather than letting the bank tell you how much you need to increase it by. So that's other
Right.
thing I will say. But in the short term, I think you have to buckle up and just get through it. I don't think it's a 2 year thing. I think it's more like 6 to 8 months. And I've
Okay.
broken it down for you.
Yeah.
You have $9,000 available on a line of credit or
Hmm.
additional cash flow. Use
Yeah.
that to supplement your extra payments. Hopefully by then you'll get through this difficult time. But
Yeah.
for others who are in similar situations where their cash flows are affected but have had homes for a while, they can
Hmm.
absolutely call Rohit. He will show them strategies of re-amortization.
Hmm.
Remember,
Hmm.
reamortization does not mean refinance.
Hmm.
Nobody says you have to actually draw money out of the home, because people say, well, I don't want to borrow more money, Ayaz, because that's going to add more burden on me. You can
Yeah.
simply reamortize without extending your mortgage balance, and that will drop your payments. You can consolidate your car. A lot of people say, no, but we don't owe money on credit cards. But on average, people have car loans of $600-700.
Yeah.
You put that in your mortgage, you
Hmm.
save 500. That's almost 70% savings of the increased mortgage amount. So that could be another solution. So there
Yeah.
are some creative ways of doing things, and I think a one-on-one meeting, depending upon the what the person's financial situation is, can work. I want to say two more things, ways, if I can, because
Yeah.
I know
Please.
our time is almost up.
Please. Please. Go ahead.
I just want to say two things. Look, especially if there's a lot of real estate agents listening on this podcast, okay? Banks have become very smart nowadays. Banks have put mechanisms in place to audit things up to the last day of closing. Banks know what is going on in the market. And we have seen what happens to the clients who find alternate means or fraudulent means, I'll use that strong word, to get mortgages.
Hmm.
Yes, they may still pass. A few of them may still get through, but increasingly more and more of them are getting caught.
Hmm.
And you know what you say, when a person is caught, that experience, you don't even wish it on your worst enemy. I
Yeah.
can tell you right
Absolutely.
now. So I
Absolutely.
just want to tell everyone that there are many intelligent, I love to use that word, and clean mortgage solutions available in the market.
Hmm.
Okay, which are much safer for your buyers, which will not add any unnecessary stress or financial pressures. I mean, I hear everybody saying on the radio, oh, 24 hours we can get you money, but they don't tell you what the interest rate is going to be.
Yeah.
They don't tell you what the broker fees are going to be. They
Yeah.
don't tell you what the lender's fees are going to be. They don't
Yeah.
tell you what additional legal charges you're going to have to pay. They don't
Yeah.
talk about exorbitant appraisal costs that they add at the last minute. And so,
Hmm.
you know, you know, talk to your clients, give them this intelligent advice. I think is very important. And I'll just close by saying that look, Rohit is a great member of our team. Please reach out to him. But I also want to tell everyone that I do a show every Thursday. As I'm going to be on there in 40 minutes now on
Yeah.
101.3 FM
Yeah.
for 20 minutes, where I talk about these things every week. And you're more than
Perfect.
welcome to come and listen. It will really update you in terms of your market knowledge, economic knowledge, because, this is the example I give.
Hmm.
When you are studying a particular profession, or even ways when you're getting your real estate license, they teach
Hmm.
you so many other things, and you say, well, that's not really stuff that I need, right?
Yeah. Yeah.
Similarly, in our business, we don't need to know a lot, but the more educated you are about the economic factors affecting our economy, and instead and in directly on interest rates, is something your clients, our clients, need to understand so that they can
Hmm.
plan properly. And I think it is incumbent upon us, it is our fiduciary responsibility, I would say, to learn these things and educate our clients so they
Yeah.
know exactly where we're going with interest rates, where are we heading with the real estate market. And if they have intelligent knowledge, like correct knowledge, I think it's a good thing for them. And so that's what I talk about every Thursday. You're more than welcome to join and listen. But really, it's
Absolutely.
it's, it's I know it's almost an hour. We're supposed to be on for half an hour. It's been a pleasure, really, Ways.
It is.
We
Thank you so
appreciate
much.
the we appreciate the opportunity, and I have nothing but incredible things to say about Rohit. He has been with me for 2.5 years. His level of knowledge that he has gained in these 2 years is phenomenal.
Yeah.
I think his clients are lucky to be dealing with him. And I would encourage agents that are on the line to try him out and see what an incredible level of service and knowledge he provides. And it will be a
Absolutely.
pleasure. But thank you for bringing us on. And
Thank you.
it's an
Right.
absolute pleasure to talk to all of you.
Yeah, thank you, Rohit. Thank you for joining. And again, guys, you can watch or rather hear Ayaz Bhai at CMR Radio. That's CMR 101.3 every Thursday at 3:40 p.m. So please join him there. I'm happy that he was on with us today. But if you loved his approach and his knowledge, and you can get more of him there, so make sure to tune in to the radio channel CMR 101.3 FM.
FM.
Yeah,
Yeah.
every Thursday. And Rohit, of course, thank you for joining. And
Thank you, thank you. I guess I was on mute. I was saying thank you for the kind words, Ayaz, and thank you for having me on the show, Wes.
You're welcome. So again, I have just going to put up Rohit's details as well. Right there, Rohit's details are right there. Like I said, both me and Rohit have worked together with clients, and we would love to work with you as well. Although I don't want to share Rohit with other realtors, but hey, I can't be too selfish. So if you're a realtor watching, reach out to Rohit, and he will help you as well. He has helped me set up, almost instantly. I put my clients in touch with Rohit, and we kind of three-way call and kind of address the situation right away, right? So it's
Right.
not losing any time for the clients and providing the service immediately. So if you are a client watching and you want a response immediately, give me a call for 168769960. Your real estate partner, Wise, here at SaveMax. Ayaz bhai, thank you again for joining.
Let me,
I want
Waze,
to
if you just allow me 10 more seconds. I just want to say
yes,
one
yes,
thing
please
that I
go ahead,
missed
go ahead,
out.
go ahead. Yes.
Waze, I've met you as well. Let me say to all the listeners or whoever is watching, I was exceptionally impressed by you. I
Thank you.
can see the demonstration of your ethics, the way you talk, the way you communicate with your clients. I've seen how well you represent your industry to clients, and the knowledge that you have at such a young age. I'm jealous that you both are very young compared to me, but I must say I was really impressed. And so I know you will do really well. I know
Thank you.
you've opened your own franchise office as well. We wish you all the best.
Thank you.
But I would have no hesitation, let me put it this way, to recommend anyone to you, because when I met you, I am much older than you guys, and I have this ability to judge, and I was very impressed. So thank you
Thank you
very
so
much,
much.
and look forward to joining you soon next time.
Definitely, we would
Thank
love to do this again, and we will check your schedule with Rohit, and we'll connect again. Definitely, it was a pleasure to have you.
Thank
And again, thank you very much. I know you're getting delayed for the radio show. We'll tune into your radio show shortly.
Thank you. Thank you so
Okay.
much.
Thank you,
Have a
guys.
great afternoon.
Thank
Take
you.
care. Bye-bye. Bye.
Bye bye.
Thank you. Appreciate.